first mental model that I want to talk about today with you, Rick, is anti-fragility. So what does this word mean to you, and how has your experience in natural resource investing informed your understanding of anti-fragility, and what examples can you give investments that have benefited from volatility and uncertainty?
Well, I think in the beginning, to answer that question, investors who propose to make themselves anti-fragile, which we'll define in a minute, need to read the book. Nassim Taleb, I think, did a wonderful job of codifying the whole concept of anti-fragile in the book. So any of your listeners who are interested in this discussion need to understand that we will today cover 0.5% of what's in the book. And now we'll get to it, but invest in yourself. Understand that you need to invest in yourself. The book's premise is that great big human systems are by nature fragile. As we've seen very recently, the banking system, taken to its illogical conclusion, is fragile. The stock market, because of the competing forces in the stock market, governments, the broker-dealers, the issuers, is fragile. World peace, as we've seen in the Ukraine, and as we're seeing now around Taiwan, is fragile. And the book, Anti-Fragile, talks about the fact that you need yourself to approach the world from your own framework. You need to be durable, you need to be intelligent, and you need to be less influenced by the mistakes of others than you need to be influenced by your own goals and by your own ability to deal with exogenous shocks. Many, many times in my life as an investor, but more importantly, as an educator, I've heard complaints from people about the fact that they couldn't accomplish their financial goals because of external shocks, pardon me. They couldn't do it because of high levels of taxation. They couldn't do it because of government regulation. They couldn't do it because their fear that Trump or Biden or some other clown was going to have such deleterious impacts on the economy that there was no sense in trying. That mindset makes you more fragile than you need to be. You are already challenged by overregulation. You are already challenged by woke sociology. You are already challenged by the political class. And the idea that you surrender yourself to those external forces, that you make other people's problems your own, you become fragile. Anti-fragile says that to a greater extent than not, you control your future. Your future isn't controlled by others. Your job is to adapt your response to the circumstance rather than be frozen by the circumstance itself. Your job is to turn a crisis into an opportunity. Ben, what's a bear market? I'll tell you what it is if you're anti-fragile. It's a sale. In a bear market, assets got marked down 50 or 60%. That means that the assets that you already have are at least temporarily cheaper if they're anti-fragile assets, if they're assets that can endure. But more importantly, particularly for a young person like yourself, you have the ability to acquire legacy assets at a 50 or 60% discount. Anti-fragile means that you look at the stock market the same way that you would look at a market for physical goods. If you were in the market yourself, Ben, or your listeners were, for a winter coat, and you went to a shopping mall, and you had done a little bit of research, and you determined that for a high quality winter coat that could last you a decade, you'd have to be prepared to pay $400 or $500. And you saw a suitable coat on sale for 50% off at $200, you'd be elated. But if you owned a stock that you thought was worth $400 and it got marked down to $200, you'd be angry. Anti-fragile is the process of understanding that a bear market, while inconvenient, is a sale.